Hi guys, how are you? Welcome back. Welcome to TradingView YouTube and to my subscribers. How you guys doing? Welcome, welcome, welcome. All right, let's get started with the video. All right, 13-year channel. I said that in the last video that this support area, quote unquote support area, the price was kind of lingering right here in this area, right? Trying to hold, but it wasn't meant to be, right? We got to bounce out of this structure here. That I said was not very convincing, and sure enough, here we go. Wave 3 down, right? Remember, this was the compass, right? This is wave 1, that's the compass. 1, 2, 3 down, boom. That's simple, right? Don't pick bottoms, right? Extract information from the data, don't apply information to the data. Shorting is not the same thing as buying, right? You want to short when no one else is looking. All those things that I've been talking about in videos in the past, you've seen them play out right before your eyes now, right? It's not a secret. It's not, look at the video back on March 18th when I was not really convinced that this breakout here, right? This, I can't even draw. This breakout was not going to last, and sure enough, that's exactly what happened. So, I don't have a crystal ball, but I can read a chart. Now, if you look at some of my recent posts, right there, I'm not posting as many because the market is not set up for bullish moves, and I certainly don't want guys running out and shorting in the hole, as they say, because bear market rallies will rip your face off. Okay, you look at Nike. Okay, broke a key area. Now that's significant. Last time it did that, it was during COVID. It's doing it again. That's you got to pay attention to that. And sure enough, it's continued on down. So let's see how this is going to transpire. But my guess is that it'll probably go lower. Now, again, I want to point out that the U.S. went into a recession on February 2020. A lot of people don't understand it. They think that the recession came because of COVID. It was not because of COVID. Remember, to go into a recession, you need two negative prints, not just one, two. All right. So officially, we went into a recession prior to lockdowns and COVIDs and all that nonsense, right? So keep that in mind. Just because it's called COVID-19, yeah, in 2019, there was a case, a singular case. So we used that year, but nothing was affected by COVID in 2019. It was affected after March, April of 2020. So a lot of people don't know that. And it's funny because people still argue about it. They're like, no, it's like, yeah, okay. All right. So taking a look at European financials. Okay. Uh, double top up here, key area, broke, right? I said, look at this key break here. It was back here, didn't fully break, had one more up, and then started to collapse. And here's where we are today. Kaboom. Magic. CRM. Remember CRM? Right? I didn't feel good about it, but the chart said what the chart said. And it looked so bullish, and everybody's like, oh, CRM, it's a great company. Why would you short it? Blah, blah, blah. Well, here we are. Not only did it break all the way to the bottom of the channel, but now it appears that this support area is also going to give way. Not good for the overall market. Um, Apple, okay. When I shorted all the way back here, right, it's like, oh, Nick is crazy, right? That doesn't look right. Oh, what's he talking about? I didn't even feel good about it, but the chart is what the chart is. Here we are today. Um, Amazon, right? Look at Amazon. What does it say? This is back on July 6th of this year. I said, I'm not convinced yet. This was not a breakout. But that's what it looked like at the time. Okay. Here's where we are today. Magic. Okay. PayPal. It looked like this at the time, just had started to break down. Nice little bear flag right in here, right? See it? Okay, this was the compass. It's telling you that there's more downside to come. This is the 2, and look what happened, right? As a result, kaboom. Not only did it break, sorry about that. Not only did it break and come all the way down here, but it broke. Broke. It even broke support, right? So what's the theme here? The theme is that multi-year support areas are just getting destroyed. Like they're not even there. Junk bonds, right? Again, this is what it looked like at the time. Oh, it's just going sideways. Nick is crazy. This is back on January 5th of this year, right? Kaboom. Not good. Take a look at Neo. Neo, I started talking about it back here when it broke the support. And this is kind of weird in the sense that it did the opposite. Instead of scaring you out and wearing you out, it wore you out first and then scared you out. Okay. Now remember, when price back here was around somewhere between $40 and $46 going sideways, today is at $13.55. And this was published back on December 3rd of 2021. Okay, 4 or 5 months ago. Five months ago. Right? And look where we are now. $13.55. So clearly you can see the results of the charting. It's not, it's all time stamped. I can't go back and change it. And you can go back and you can look at all the videos that I posted previously. Some people want a few more videos, more frequent, and that I understand it. But if nothing materially has changed, and the call is just the same, there's not much more for me to add, right? There's some learning lessons that I try to incorporate in the videos, but overall, if nothing has changed, the market is going down. The market is going down. I don't need to come out and tell you every single day the market is going down. I told you not to pick bottoms. Now you know why. Okay. Shorting is not the same thing as buying. It's a different animal. Go look at that video. PAVE. Look at this one, right? This is the infrastructure ETF, right? It looked the same as it did before. Rising wedge, falling. Rising wedge. What do you think this is going to do, right? Well, of course it fell. Magic. Okay. Um, this one had a potential to start to fall down. Brazilian real against the dollar. Okay, and look what happened. Boom, dollar popped. You don't short this, right? And that's why it's yellow. I didn't short it. If it started to break down, it had the potential to start to really unwind. Didn't happen. All right, that trade is gone. Forget about it. Gold versus NDX. Okay, it still has a lot of work to do. It's doing nothing. Gold, in fact, is falling. So it's not doing anything. Um, what else? Gasoline. No, what is this? Wheat. Okay, wheat looking good. It's poised to continue to push higher. There's no reason to think that it won't. Um, Airlines. Now, airlines we talked about before when they were all the way back here. This is back on February 23rd. And I said, look, this thing is going to go. Okay. And sure enough, it went. And it went hard. So here's where we are today, right? This is a reminder. This is just an update. Okay. That's why it says update up here, right? It popped from this drop, but it's going right back down again. There's a lot of structural problems there. Um, S&P priced in gold is dropping now. So what does that tell us? Well, it just means that the S&P 500 is underperforming gold. Does that mean that gold is a good buy? Well, gun to your head, if you had to put money in the market, I guess gold is slightly better, but it's not doing anything. It's not making you money at the time, right? Um, we're oversold. We're oversold. I keep hearing this over. Yeah, well, the thing with being oversold is you'll continue to be oversold, and the market will continue to go lower. Oversold doesn't mean anything. If anything, it tells you it's going to go lower. But that's not the way people read it. They try to buy during those periods, which I think it's a mistake. Um, so you kind of get the point of what I'm talking about. Look at the VIX coiling up, right? This was a rounding bottom I identified back a while ago, coiling up, possibly, big move to the upside coming. Um, you look at cryptos, okay? We said this is the red roof in, right? You don't like red roofs in. You really don't want them to occur if you're a bull, right? 1, 2, 3 up. Look what happened. Boom. It broke. Magic. Big bear flag. Broke. So again, I talked about it last week. Look at Bitcoin. Same thing, right? You got this um, nice big bear flag that formed. Again, where's the compass? Here it is. Okay. Drop. 1, 2, 3 up. Once it completed the 3 up, kaboom, crashes down. I see, on Twitter, so many people coming out, buy, sell, buy, sell in cryptos. And it's like, uh, you know, I get dizzy. They stick to the ones that work for them, and they forget the ones that didn't work for them, and they're experts, and uh, it's painful when you know what you're doing and you see these people that just kind of like, I mean, they're trying their best, but it's just, I don't know. So here's Ethereum, and again, I'm going to point this out, um, that I took my profits and I ran, right, and that was all the way back here, November 30th of 2021, and I said, look, here's Ethereum. I'm taking my profits. See you. Bye. Right. Here's where we are now. Right. You see the big bear flag forming? Yeah. That's where we are now. Right. Look at that nice bear flag. And every time it was going up, oh, see, you were wrong. Yeah. Okay. Am I wrong now? No, I'm not. So, um, yeah. That's people are looking, well, the Fed this and if you're wasting your time with the Fed trying to guess what the Fed is going to do and what this means from the Fed and what the Fed this and these things you should not worry about. You should worry about having a good fundamental understanding of macroeconomics. Okay, and as you all see now, a lot of people were telling me, well, stocks don't care about economics. Well, why do they care about them now? They certainly care about economics now, don't they? Exactly. Um, so, get a good fundamental, basic understanding of macroeconomics. Learn how to just read a plain chart off a white canvas, and that's all you need. Now, it sounds easy, and it is easy, but it takes time to learn how to do that properly. Ethereum, same thing. Compass, bear flag, lower. Simple, not difficult. Tomorrow, inflation numbers are coming out. Czechoslovakia or Czech Republic, sorry, no more Slovakia. The Czech Republic's inflation came in at 14%, highest since 1993 or something. Everybody's trying to play this year over year, like, okay, we started inflation a year ago. If we drop out 1 month and we add another month, and then it has to be, much higher than the previous month, 12 months, then it's going to start to come down, and then I'll look like a genius that I called the top. No, that's just charting fuckery. Don't get fooled by that. Okay. Commodities are still going higher. They're bullish as all bullish can be. Commodities are what driving inflation. Too many dollars chasing the same amount of goods. Raw materials have been rising, and as raw materials rise, inflation rises. It's that simple. It's not the transitory. It's not the supply chain that they were talking about before. Now we have supply chains. Previously we didn't. And everybody's trying to do this, year over year kind of chart fuckery that will drop off one month, add another one. It won't be as high as it as was because we are starting from a higher level from last year. Therefore, it's going to look great, and I'll look like a genius that it was transitory and supply chains are getting better or whatever they're going to come up, cute story to say. But don't fall for it. It's just, you know, it's just chart fuckery, year over year chart fuckery. That's all it is. And you know, they dress it up with stories. It's about stories, and that's what people really like. People really like stories. Um, Unfortunately, they don't know what it means. They don't know that the stories are wrong, but they like stories, and that's what these people are really good at on Twitter. They're really, really, really good at storytelling. There's a guy out there. Um, Discipline Fun or something. Uh, I think it's this one. Yeah. Okay. And he's been on Twitter forever and a day, and oh, you just don't understand, and I don't believe in charts, and I don't believe in this, and I have the magic. I'm an expert in monetary. I'm an expert in economics. I'm an expert. Okay. Since inception, it's done nothing but go down. Nothing but go down. He was the one running around with transitory and supply chains and don't worry about it. Ha ha ha. And I got the magic wand how to invest. And he has underperformed grossly. Look at that. It's a disaster. You can't even see it, but it's like, 14% down. If we go from the top, right, from his best, it's down 15%. It's not what I would expect from a guy that has 60, 70,000 followers. So I'm not telling you because I'm shitting all over him and haha, I want to make fun of it. That's not the point of this. The point of this is that you need to be aware of these things. Just because somebody has a lot of followers does not mean that he really knows what he's talking about. It just means he's a good storyteller. He's great with the stories. But stories don't make you money. Stories don't teach you how to invest. And clearly, this guy doesn't know how to invest, right? I mean, what kind of disciplined fund loses every single day after inception, with the exception of a couple of weeks? That's I could get my 13-year-old to go out and do that. I mean, come on. Anyway, uh, dollar very strong. Okay, breaking out almost. Okay, really about to believe me, if this takes off, we're going to have a new set of problems. You would think it's good for Americans, and it is. Purchasing power is rising. That's good, but you're going to end up with a currency crisis somewhere else in the world. All right, euro U.S. dollar is about to go to par. Okay, I'll give you the bigger picture. Look at that. It's about to break. That would be very interesting. Okay. Last time it was below par was 2002, 3, 1, whatever. So that's going to be interesting. And finally, we'll end it with this. There was a lot of resistance here on this trend line on the 10-year. Okay, let me kind of move this over. All right, I'm just kind of remembering, trying to get people to remember that back here we had a public debt of 22 trillion, and now we have a public debt of over 30 trillion. So higher interest rates are problematic. Okay, and if it starts to break out here, we're going to have yet another set of problems, right? If it breaks out here, then you can see a big run up. So this will create another set of problems, and that's the thing with creating models. Models sounds great. The problem is that they work great in an incubator, not in the real world. You don't know what's going to blow up, and you have to do dynamic analysis, and that's what I try to do, and try to give you the macro perspective, the big trades. Not it went up today, it's going to go down tomorrow. All right, thank you again very much. I really appreciate all your support. Thank you to TradingView, thank you to YouTube, and thank you to all you guys. Have a great trading week, and I'll talk to you soon. Bye bye.